Yo, what's up, guys? Good morning. Yeah, Powell starts speaking in 2 minutes. Um, Give me a second, guys. I'm just trying to figure this all out here. All right. Let me just check YouTube quick. I want to post this on X as well. All right, let's go on. Yo, sorry, guys. I'm just having a little bit of technical difficulties here. Yo, what's up, Mr. Paris? Good morning, bro. Good morning. How are you doing? Why is my chat not working? Try and refresh the chat. Oh, there we go. All right, perfect. Let me make this a little smaller. All right, there we go. Yo, good morning to anyone who's watching this. All right. Wow, guys, look. Are you guys seeing this right now? Wait, what is going on? Why is my stream not updating? Yeah, there we go. Guys, look at this. Look at this epic move on NQ right now. That is unbelievable. Look at this, guys. Tesla's at 218. Nvidia's pushing. Everything's pushing. Yeah, that's what happens during news. All right, so looking at the 4-hour chart, guys. Okay, finally we're getting back to this. So here's what I'm looking at. My overall picture, I want this buy side and I want these equal highs right here at 21.6250. That's my main target. Hold on. All right, there we go. So yeah, this is my main target. Buy side here will be a target as well. And then obviously this target right here on buy side will be a target as well. So we'll label that as buy side liquidity. So all these are my targets. And my overall objective is to get into this daily fair value gap. So let's look at it at the daily so you can see what I'm talking about. What is a daily fair value gap? When you have a big down close candle, for those of you who don't trade ICT, you have a big down close candle, then you have two wicks that form, and the space in between them, if you just draw a box, is the fair value gap. So that is where I think the algorithm is going to drive price. In my opinion, that's just the most simple one. Hold on one second, guys. What's going on here? Oh, I'm getting all these notifications, and I don't know why. Who is this girl? All right. So you guys know, obviously, that Jackson Hole's happening right now. So Jerome Powell is speaking, and a bunch of other Fed speakers are going to be speaking as well. If you look at the economic calendar, you will see what's going on. But you see at 11 a.m. we have FOMC member Harker speaking. And then we have day 2, obviously, of the Jackson Hole. But it goes all day. Like, you can consider it happening. It's all day, as you can see here. Oh, currency is all. Sorry, my bad. But it's happening all day. Like, when you hear these FOMC members speaking as well, it's all related to Jackson Hole in Wyoming. And it's not an FOMC meeting. It's similar to an FOMC meeting. It's just a bunch of rich policymakers that talk about, and economists that talk about what they think is going to happen with inflation rates and this and that. But what's crazy is that Kamala Harris and the Democratic Party I mean, it wasn't them, but I mean, it is them in the sense that it was their policy and their data points, but the Fed revised the employment rates for the year, I think it was, or a few months, I can't remember, but they revised it by like 800,000 jobs. So the unemployment rate was a lot higher than was even reported. So the fact that unemployment is going up and inflation is going down, when in reality it's not actually, that is signaling to me and a lot of other people that the Fed cuts are for sure going to happen in September, on September 18th. So it's not guaranteed, obviously. We do have CPI on September 11th. So that's going to be a big deal as well. If the CPI comes in below expectations again, that's going to be like almost a for sure that the Fed's going to cut rates. So the question will be whether it's by 25 basis points or by 50 basis points. If we look at the rate probability percentages, let's see here quick. So we have 26 days until the next meeting, which is on the 18th of September. Tesla's holding its own, that's good. So just waiting for this to load up quick. So we're projecting a 28% chance of a 50 basis point hike and a 71% chance for a 25 basis point hike. So very high chance right now that we're going to get the 25 basis point hike. And there's a 100% chance that the market is pricing in that that we're going to have at least a 25 basis point hike. What was the other thing I wanted to say? So, blanking now. Sorry. Oh, so what I was trying to say is that this is going to be kind of crazy economically because, well, number one, the market has been pricing in a probability of rate cuts. You know, for sure, they've been pricing that in. Um, Yeah, so the market has been pricing in these rate cuts. So like pretty much the market is front running what they think is going to happen, right? So if you look at the NASDAQ, after we had the carry trade situation, and then we pretty much got a alert from the Fed. Wow, guys, the market is pushing. I'm so sorry. I don't know what's going on with me today, but like my brain is all over the place. If you look at NQ, once the carry trade thing happened in Japan and everyone thought the world was going to end, then we finally got information about unemployment and the inflation rates, and it was pretty obvious that the Fed was going to start cutting rates. So the market likes to price those things in, okay? The other issue with this whole spiel is that's why you're seeing this right now, this whole push up, even though it's all algorithmic, but if you want to view it in the eyes of like what's happening as far as traders and retail, that's what's happening. But also when you have higher unemployment than expected with this whole drop revision that happened, that not only can lead to disinflation, you know, like in the inflation rate going down. Obviously, that's the whole point of cutting rates. But you can also get deflation, which is pretty crazy because now you have unemployment super high, rates are coming down, so people aren't spending as much money because they think that that money will be worth more in the future. So it's just like a whole crazy situation. And yeah, it's just pretty big. It's a pretty big deal as far as like what's going to happen for the economy as a whole. But this Jackson Hole meeting is going to reveal a lot. Powell's going to be talking about how much he's going to cut rates. If he's going to cut rates, he's going to either have a dovish or a hawkish tone, probably more dovish. But yeah, that's pretty much what's going to go on. So that's like the economy and rates. I was looking to sell puts today on Tesla if we got a drop, but obviously we didn't, so those are not going to do me any good until I see it actually drop a little bit more. Damn, that's nice. Yeah, so the other thing I wanted to talk about, guys, actually. So let's talk about bonds, subject for a lot of people, but you have to realize that if the Fed starts to cut rates, if on September 18th, if we get our first rate cut, most of the time that marks the top of the stock market for an extended period of time. So there is a really good investment opportunity for you guys, I'm telling you right now, and it's not anything to do with stocks.